Hello, learners. We have seen many discussions on capital gains, and I thought that let me end with some important facts. As you know, that capital gains attracts huge amount of tax because the gains itself sometimes is huge. So that's why we should take every care to see that the tax compliance is properly done. You pay the required amount of tax as calculated under different sections of the act. And at the same time, I would also say that you take all the benefits which are given under the act, the exemptions you should take. Budget 2019 has announced something special, and I thought that let me take this to you. One is that the SSEs can get an exemption by investing long term capital gains from the sale of house property in up to two house properties against the earlier provision of investment of only one house property with same conditions. So now remember, instead of one house property, you are getting two house property. Though the conditions are same, however, the capital gains on the sale of house property must not exceed rupees 2 crores. So I thought that before we end the discussion on capital gains, you must know the latest amendment which has been brought by the budget 2019 and applicable for the future assessment years. Now, before ending, again, I want to make a recap on the identification of long term and short term capital asset because the majority of the tax implications will depend on whether the asset is a short term capital asset or a long term capital asset. As you can see, under different categories of assets, we have immovable property, listed equity shares, unlisted shares, equity mutual fund, debt mutual fund, and other assets. In case of immovable property, the cutoff time is 24 months. That means if you can hold an immovable property for a period of 24 months and more, it will qualify for long-term capital asset. But if the holding is up to 24 months, then it is short-term capital asset. So in long-term capital asset, you can get some kind of tax benefits. In case of listed equity shares, it is 12 months, not 24 months. So 12 months. A listed equity share, if it is held for a period of more than 12 months, it will qualify as long-term capital asset. Unlisted shares, if it is not listed, listed 12 months. In case of unlisted shares, it is 24 months. So 24 months is the cutoff for unlisted shares. Like listed equity shares, equity mutual funds are also 12 months. So if mutual funds you hold it for 12 months or more, it will qualify as long-term capital asset and the long-term capital gain tax will be applicable as per the rule. Debt mutual fund, there is a difference. Here it is 36 months, not 12 months. Debt mutual fund is 36 months. 36 months required, more than 36 months required the period of holding for making it long-term capital asset. And in case of all other assets, it is the period of 36 months or 3 years. So just remember the different categories of assets so that you can see that whether the asset qualifies for long-term capital asset. So I thought that it has been important for me to discuss this before I end the discussion on capital gains. Thank you.